Candle Range Theory Trader back with you with another video on the ultimate trend trading hack, the candle range theory. So let's not waste time and get right into it. Now, is this necessary to know? No, it is not. Okay, this is for people who predominantly want to try to identify the trend of a pair and get into it. You can use this on any instrument, but the times that I'm giving are specific to the Forex market, just so you know. Now, what you're going to need in order to do this is a basic trend indicator, okay? And we're going to take the baseline approach. All credit to No Nonsense Forex, who came up with this idea. Although it's not unique, plenty of people use it. But we're going to take a baseline approach, and all the baseline is an on-chart indicator is going to tell us what the trend is, all right? So if the candlesticks are above the baseline, that means you're going to look for bullish candle range theory price action. If the price is below the baseline, we'll assume that the trend is short and we're going to look for bearish candle range theory price action. So it looks like this in a nutshell. So let's pretend this is our baseline. This could be a SMA, EMA, whatever you want it to be, this blue sloping line here, all right? And we're looking for a short type of candle range theory, no matter the time frame, to look like this. This is a standard 2-3 candle pattern, the range, the manipulation, or I like to call it the money candle, and then distribution down. Or sometimes we may have one candle here and then another candle that makes a higher high and then reverses price action like this. So it comes down and closes the range out down there. So, but the key part is that though, like I said, we're assuming that because price is doing this under the baseline, then we're looking for short candle range theory price action only, and the opposite for long. So the price is above it, everything's just reversed. All right. So I hope that makes sense to you. If not, rewind it, slow it down, ask questions, but this is all we're looking for. So we're going to test about 4 baselines on this video: the 200 EMA, the 50 EMA, the 20 EMA, the ALMA, and the DEMA. So those are like just some basic EMAs, and then also some other ones. There's tons of baselines that are out there. You don't have to use these. Experiment with them. It's up to you. So for back testing on this presentation, I'm going to be doing this on the fly. I only trade the daily price levels and also the 4-hour price levels. So we're going to be looking for 159 patterns, 59 patterns, and maybe a few 19 patterns. I'll explain that to you as we go through them. So don't let that phrasing throw you off. Okay. So an important note as well: the pattern always trumps the baseline, because the price action is going to be the same whether the baseline is there or not. You will see, for instance, just for this example, you'll see this type of price action above the baseline. You'll see this type of price action above the baseline or below it. Either way, candle range theory can occur at any time, anywhere on the chart, irregardless of a baseline. Okay, so let's not get that confused. Okay, you'll see CRTs both with the quote unquote trend and against it. So the foundation of your trading should not be the baseline, it should be the trend. Okay, it is the price action, it is the pattern, it is not the trend. So baseline goes above trend. All right, because some candle range theories are counter trend. Okay, so let's go to the charts. Enough talking, let's get into some actual action here. So we're going to go to the chart, and like I said, we're going to start, let's do the daily. So we're going to start on the daily. Let me try to find one. I'm not a fan. I don't use EMAs. When I did used to, one thing I would hear is that if an EMA is flat, you really don't like that. You like to see an EMA that has some direction to it. So let me see if I can find one that's either pointing up or down. So a lot of these are flat. Here we go. Okay, sloping up. All right, here we go. Perfect. Okay, because you see here, this is at an angle. So this is our baseline. This is a daily chart. So as long as price is closing above the baseline, that means we're looking for price action to go above, or we're looking for, on the daily one, we're looking for price to sweep below the daily low and then close back inside of it on the 1-hour chart. Because like I just identified, let me see here, right here, daily chart, we're looking for 1-hour entries. All right, so I'm doing this on the fly, but let's just go here. So already I see one right here. So our decision flow, let me leave this line black. Actually, you know what? Let me get rid of that. I'll just use my standard go-to candle range theory low parallel line. Get rid of the drawings. Okay. Here we go. So this is Wednesday. So this price action is Thursday. So this is candle range theory low right here. So when I'm trading off of a daily level, I like to see a 1-hour close above this candle range theory low. So I'll just do the replay option. I'll put price. I'll put it right here. Yeah, that should give it to us. And let's see what our best entry would have been. After you identify the baseline on the daily, you really don't need it on the 1 hour. I'm just going to get rid of that just to avoid any confusion. So the best entry would have been right here at 3 a.m. Eastern Standard Time. That is London session. If you want to put the stop loss outside of the range, that's fine. I'll do something like, let's say outside of the range would have been like, let's say 20 pips. Okay, so we're going for 1. It went as high as like 1 to 8. So that's a pretty good price action there because, again, we're trying to trade the trend. So there you go. That's all you're looking for right there. Okay, I don't know how to make it any clearer than that. All right, so this was yesterday's low. Okay, so again, one more time, let me go back. So let's say you come to the chart at the end of the day on Wednesday. Let me bring back the 200 again. All right, so you want a bias. If you want a daily bias, you just say, okay, as long as price is above my baseline and I'm looking for daily chart levels to trade, prior day lows or highs. In this case, you're only looking for prior day lows, then you're just long. So when price goes below it and then closes back inside of yesterday's low on the 1 hour, you get in. So you're only checking the chart at like 2 a.m., 3 a.m., 4 a.m., 5 a.m., once on the hour, every hour. Okay, so that's how that will work. So let me see. Let me close this. So let me see if I can find a short example on a different pair. Remove that. And then we'll go to our next baseline. Let me bring this back up. That's the 50. Let me exit out of the replay. I'll try to find like a long and short on each one. Let me go down to like Swiss. Okay, here we go. Swiss. Perfect. All right. So see here, this is the 200 EMA on the daily chart. So I'm looking for price to go above a prior day high and then close back inside of it. And I always prefer 1 day trades, but I see one that worked out over 2 days. You know what? Okay, I'll do this one right here. Bang. Okay, candle range theory high right here. Okay, so once again, price is below the baseline, and then right here, this is Friday to Monday. Okay, so our bias is short, so we're only looking for bearish candle range theory price action. And again, we're trading prior day highs and lows because we're short. So if I do my replay option right here, let me start anew. There we go. All right, so I'm going to get rid of the 200 now because I already know trend is short, so I don't need it anymore. Now it's just all about price action. I'm trying to trade trend. Let me go down to the 1 hour now to see my best entry on this Monday. Best entry would have been right here. Now, here's the reason why price went, and this is actually at 5 o'clock. That's not the best. This is like 1800 Sunday. I hate that because the spread would have been too high. Spread normally calms for down. Let's just say right here, about, 8 p.m. Sunday night where I am, Eastern Standard Time. I'm on the East Coast, okay, United States. So, but we'll just say that price would have been good to go short here at about 8 p.m. on a Sunday. 10 pip stop loss. 50 pip take profit because 10 pips is outside of the range. So your stop loss can just go outside the range because we believe that price will stay below the prior day high if we're short. And we'll go forward a few more hours. And as you can see, take profit did hit on Tuesday at about 10 a.m. Okay, so that would have been a long hold. But obviously, when we talk about trading trend, when I go back to the daily chart, reset the chart view, and I let it go for a few more days. I'm going to say all that, if you're a heavy type of swing trader, all that could have been yours just based off this one candle range theory. But the thing with the candle range theory is this: I don't make any guarantees outside of the range. So this was the range high. This is the range low right here. Now price did break out outside of the range and then just kept right on going. But I don't know of a way to say, okay, well, price is going to drop this much. I don't try to predict price action. I just react to what I'm seeing. I have no way to know how far price is going to drop. So, obviously if you're trading trend, it's up to you. One confirmation you can use is that if price closes below a prior day low, then that's a good sign. So like and this is just for a daily chart. So like right here, it closed below the prior day low. I'm just going to mark it right here. Okay, so this day closed below this low, so that's a good sign. This day right here closed below this low. Well, that's a good sign. See how price just retraced. So, once the range completes is my point. If you just want to see how long it can go and just let it go, that's up to you. But again, I don't try to predict how far the drop is going to be. I have no way to know. Okay, so I'm just going to be honest with you. All right, so let's get rid of that. Now, next I'm going to try the 4-hour chart and a 50 eBay. Bang. So there's our 50. And remember, when price is above the candle range theory, we look for longs. When price is below candle range theory, we look for short price action. So let me go to another pair. Let's try pound CAD. Let's see. Now the 50 obviously is going to be more volatile than the 200. 200 is a little slower moving. Let's see. And since I'm on the 4-hour, I'm looking for the 159 pattern, which the low of the day typically plays out in the 5 o'clock hour. So we got a nice little trend here. And here's one right here. This is perfect. So let me isolate the range. The 159 is based off of the 1 a.m. 4-hour candle. Okay, so this is on Monday, September 8th. Okay, so you have, let me do the replay option here. All right, so what's our first step? What's my bias? Price is above the baseline. Okay, so that's why I'm looking for long candle range theory price action. I want to see a 159, so I look at 1 o'clock. Okay, here's the range. 5 o'clock, based the low of the day, closes inside of it on the 5-minute chart. Okay, that's my entry window or entry chart. I take entries on that. I don't need the baseline anymore on the 5-minute chart. I'm going to go ahead and get rid of that to avoid any confusion. My entry would have been at 6:30. Well, no, actually, it closed above it, back inside the range right here at 6:15. So we could have taken a long position right there at 6:15. Let me see if we can get away with a 10 pip stop loss. We can. Okay, let me make this a little bigger so you can see. All right, so see this green candle right here? 6:15, it closed into 6:15, 6:20, either way. Okay, that's when it closed back inside the range. That's our entry. And it gave us an easy 50 pips. That's 1 to 5 using a baseline as trend. Now, remember, though, this price action is the same whether you have a baseline or not. It's just a way to see, okay, what might the trend be? All right, but no baseline is 100%, so don't think that for a second. But this was 159 above the baseline. Okay, let me put it back on there. Okay, so there we go. That was a long example. Okay, so price above the baseline. So I'm only looking for bullish, okay, bullish candle range theory. Okay, I hope you see that. I mean, it's really not that, I don't know how to make it any simpler than that, to be honest with you. Okay, so let's get rid of that. Let's see if we can find a bearish example with the 50. Let me get it out of the replay. I could probably find it on the same pair, but I'll go to a different one. Let's try euro dollar. And what are we looking for? Bearish. So yeah, here's a nice little bearish drop here. Price being below the baseline. I'm mainly focusing on the 5 a.m. candle. 5 a.m. candles. Nothing there. Let's see if I can find a better one. Let's try the yens. Okay, here's some oscillation below the baseline here. And bingo, we got one. Well, this might be a 591. Hold on. Give me a second here. I like for the candle range theory to show I like for this manipulation candle, this middle candle, to be the high of the day. That's just me. That's my preference. So I'm trying to make sure this is all in one day. So that's Monday. This is Tuesday at 1. Well, for the sake of time, I'll just go ahead and isolate this one. All right, so here we go. Candle range high. candle range low. Right there. Okay, so we see here. So here's our range candle at 5 a.m. 9. So this is a 591. I don't really trade these, but it is possible to catch one of these. It's same price action, it doesn't matter. So you just got this, the manipulation candle here in the middle. And once price closes back inside the range, you take it on the 5-minute chart. So this is our candle range theory. Candle 1, candle 2. Let me make this bigger. Candle 1, candle 2, candle 3. So let's go down to the 5-minute. I'm going to get rid of our baseline because you don't need that, just to avoid confusion. Okay, baseline, once you know what trend is, you can get rid of it. You do not need it, okay? You do not need it. Let's see, best entry would have been, you could just say, it's 10.05. Let's see what type of stop loss we could have got away with. I always try for 10 to 15. Yeah, you could have got away with a 10 pip stop loss on that one. All right, so, and these are 1 to 5s. So if I just let it play out a little bit more, easy peasy, okay, right there. All right, entry at 10:05 a.m. and we got ahead. Profit was out. We had to hit our take profit on Tuesday. This was Tuesday at 10, and then by 6 or so p.m. Take profit was hit. So you may have had to hold this overnight if you wanted to complete it, or not. You could have got 1 to 4 even before the market reset, right around here, 1 to 3, 1 to 4, somewhere in there. So that was fine. So that's that. All right. So see, remove that. So if you want to use the 50 or the 200, as you can see, those do work. That's fine. Let's see what else we got. I'm going to go back. So let's try the 20 EMA. So how do you do the EMAs? And we'll go back to the daily for this one. To put an EMA on your chart, now let me try pound yen. Okay, daily. You're going to go to indicators. You just type in EMA. Moving average exponential is what you'll see. And I'll just do this just so you can see it. Let me get rid of these two. And a line will pop up on your chart, okay? I think it defaults to 9. You're going to click the gear icon for settings, and under length, you just type in the number, so 20. Everything else can stay the same. You can change the color of it. For this one, let's change it to black. And we're going to thicken it up a little bit. Color black, a little thicker. And that's it. So obviously, the lower the number, the more it's going to respond to price. So you don't want something that's all up on price, but at the same time, you don't want it so far away that like it just takes forever to determine whether the trend is. So lower EMAs may not be the best for this type of pricing exercise, but at the same time, you just, like I said, you just experiment. You see what happens. So let's see. I'm just going to do one now because I don't want this video to be too long. So the first one I see is what I'll take. Remember, we're looking for CRT price action above or below the baseline. So the 20 EMA in this case is our baseline. See, like this is a short candle range theory, but it's above the baseline. You're going to see that. Oh, well. Let's see. And what am I on? Daily? Okay. I mean, if I miss any, if you see some that I miss, hey, I mean, but like I said, you need to be doing this yourself if this is something you want to try anyway. Okay, well, here's one. It's thin, but it's there. Okay, remember, we're on the daily chart, so let's mark our candle range theory low. This is a daily low. And candle range theory high right here. Now with baselines, if you can expect, I would say it's more realistic to expect a breakout of the candle range, but again, there's no way to know how far price is going to go. Let's do our replay option. We'll do that right there. So remember, okay, we already know the trend is long because price is above the baseline. Okay, so now we can get rid of it. Okay, we don't want it anymore. And for daily, prior day high, prior day low for daily, we go ahead and drop down to the 1 hour. So we only have to check price once on the hour. As long as the low holds of the candle that closes inside of it, you're fine. So in this case, the best entry would have been right here at 11 a.m. on Wednesday. Okay, we're trading off Tuesday's range. So let's see what type of risk reward we could have been looking at. Because the first hour, if we notice right here, if you get in at 11, you would have dealt with some drawdown for about an hour. All right. This one, let's see. You might even got stopped out. as well, because this one did have a bit of a retrace. The safest stop loss would have been all the way down here, but that's a 53 pip stop loss. I don't use stop losses that big. I just don't. So sometimes you can wait for a retrace. I tell you what, one trick you can use is using a fib to look at the retrace is just on the candle that closed inside of it right here. And anything below the 50% around or below the 50% level is fine. So let's just say for the sake of this example, you would have got in like right in here, right on the level. Well, actually, let's see, hour close. Yeah, let's just say 12 noon, like somewhere in there. All right. Of course, hindsight's 2020, but at the same time, it is what it is. So we'll set it below this candle's low, the stop loss, and that's about a 20. We could do a 20 pip stop loss on that. Yeah, that's fine. All right. So let's just say we let this candle pass, or you may have been stopped out or whatever, but just re-enter. Either way, just control your risk is the point. And then once you get in at that 50% level, you just let the price rise. It definitely went way beyond a 1 to 5. Let's go back up to the daily. We take the meat of the move, so that would have been good for 1 to 13. Like you see the expansiveness there of this next candle. So this would have been an overnight hold. So that's that on the 20. Okay, but it's still the same thing. Let's get rid of that. Let's try another baseline now. Let's try ALMA. How do we get the ALMA? We go to indicators, ALMA. It is this first one here, Arnauld, Legault, moving average. There you go. You can play with the settings on these other indicators as well, or all these baselines. It defaults to a 9. This is the part where experimentation comes into play. Don't ask me what settings are the best. I do not know. I do not really use a baseline. Occasionally I do, but sometimes I don't. Okay, but like I said, they all do the same thing. It's just a matter how good one may be over the other. As you can see, since it defaults to 9, it's pretty close on price. So that may not be the best setting. You may want to increase it a little bit so that it's not so close. Since it is so close, though, what I'll do is I'll drop down to a 4-hour and see if we can find something on a different pair. Let's say Aussie dollar. And yeah, this thing is like really on price. Like it's really just too close. So I'll tell you what, I will increase the input to 100 because we already did a 200. We did a 50. Let's try 100, see what that gets us. Okay, so there we go. Again, I just made that up. I'm not saying this is the best setting. You're seeing me. This is what it takes, though, to experiment with different stuff to try to get a better edge. All right. So this is a 100 ALMA price action on 4-hour. I already see one that I think may be a good one, but let me see. So remember, price above the baseline. This is the price action, but it's not at the time of day I trade, so I'm gonna skip that one. This one may be good. Nope, that's still at 1700. Let's see here. Nope. I'm seeing the price action, but it's just at I hate to say the wrong time, but it's just like, it is what it is. All right, I'll take this one. Now, this is one where it's kind of like a caveat, whereby you have a candle range high right here. The second candle sometimes could be an inside bar, and then the third candle will both manipulate above it and then close way down here. So this may have been news driven. I don't know. But at the same time, I wanted to expose you to this so that you could just see it. So again, what's the first step if you want to trade trend? Where's the price? It is below our baseline. All right. So we're on the 4-hour chart, so we look for an entry on the 5-minute. So here's the first high of day right here at 9 o'clock. Price between 1 and 5 doesn't really do much. And then at 5 a.m., it creates a new high of day and then just tanks. So this is basically an M pattern, leg 1, leg 2. It's just spread out across. They fake you out a little bit, trying to get you to go long, and then boom, the real move comes in the 5 o'clock hour. Let's see at 5-minute chart. Remember, we do not need our baseline at this point. It does not help you. Okay, so don't try to add to what I'm saying here. I know some of you probably will, but I'm telling you that it's just good for detecting trend. After that, we get rid of it. Best entry would have been, let's say here, 530. We could have got away with a 10 pip stop loss. And I mean, it's way beyond a 5, maybe way beyond 1 to 5. But as you can see here, we got the baseline, the price action we wanted to see. We'll just say it's 1 to 5 and just leave it at that. So you got that. So that would have been good. So we'll get rid of that. And let's go back to the daily. And we'll do our last baseline test, which was DEMA. Now remember, the baseline is just an on-chart indicator that tells you which way price is possibly trending. So DEMA. It is, the DEMA is, where is it? Is it this one, I believe? I'll know it when I see it. Yeah, that's it. All right. So when you check indicators, it's going to show you as well. If you go to the, not the gear icon, the 3 dots, and you say about this indicator right here, or about this script, it'll give you a description of what it's about and how to really use it. But long story short, all this and how it's calculated, you don't really need to know all that unless you're just really into it. But easy enough. Okay, if this line is red, the trend is short. If this line is green, the trend is long. Done deal. All right. So of course, you can obviously play with the settings. I'm not going to do that for the sake of this, for the periods and all that type of stuff. But you can play with the settings to see, because default settings aren't necessarily guaranteed to always work. Now let's see what we can see here. So obviously you have a short trend here. Da 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 da. And what am I on the daily? Okay, so yeah, we'll give it a try. We'll try to look for a daily CRT, and I found one right here. Perfect. Back to back. Okay, so let's get our candle range high. This is Friday to Monday. Candle range high is right there. Candle range low is right here. And again, and obviously you see this is the daily chart. Price really breaks out of the range and continues down. All right. So now that we have our daily range here, this is Monday. Let's see on the 1 hour chart our best entry, what it would have been. I'm now going to get rid of the baseline because we do not need it anymore. Go down to the 1 hour. Actually, you know what? Let me do the replay to make this a little easier. And I'll do that one. Okay, so we're looking for Monday though. So now I go to the 1 hour. Okay, Monday at 12 noon would have been our best bet. If you notice here, let me see if I can make this big so you can see. Monday at 1 o'clock, okay, because the 12 o'clock candle closed into it. So when this 1 o'clock candle opens on Monday afternoon, that's our entry right there. We're going to put the stop loss above this candle's high. I mean, you got options. You can do it either above the high of the day or above this the last candle's high that closed inside of it. Either way. So we'll do a 15 pip stop loss just to keep it somewhat even. Right there. And then take profit. Ideally, we always shoot for the bottom of the range, especially if the trend actually works out. Right there. And that gave us a 1 to 5.6, okay, for 4 hour candle range theory, okay, based on the daily, I'm sorry, not 4 hour, daily candle range theory, okay, because we traded off the high of the day from Friday to Monday below the baseline. Let me put the baseline back up on there one more time. There it is. Okay, so because DEMA said the trend was short, I'm only going short in line with our candle range theory, and that is it. So let me get rid of these drawings and wrap this up. So, in conclusion, okay, again, this is not necessary to know. If you like what you saw here, use it. If you don't, get rid of it. Who cares? Okay, but this is more so for swing traders, not necessarily scalpers and day traders, because if you like to hold trades a while and see if you can really make big profits with big moves, use this. The benefit is that if you can nail a trend, you can catch the bigger moves, but it's not necessary to catch a big move to make money. If you can get 30 pips, 30 to 40 pips every trade, that's more than enough to make a decent living as you win. Okay, you can experiment with various baselines. I've shown you 4 here, but there are more. Don't think there's some sort of a, what is the term, holy grail baseline that just catches every single CRT in line with trend. That doesn't happen. Okay, so don't bother with it. Just pick the one that's easiest for you to understand. If you want my recommendation, the EMA is fine. 200 EMA is fine on the daily. I like that. If I had to pick one, that'd be the one I choose. I do a 200 EMA on the daily with trading daily levels and take 1 hour entries. Done. All right, but you do what works for you. Remember, risk management though is still going to be number one. If you have not managed your risk, if you don't know how to do that yet, finding a baseline is going to be a waste of time for you because you're going to start to win trades and then lose trades and make more deposits and buy more challenges. Baselines will not put money in your pocket. Risk management is what's going to do that. I'm going to harp on that. Okay, I'm going to harp on that. So you can get tired of hearing me say it, but I'm going to keep saying it because it's the truth. Lastly, past performance does not guarantee future results. Just because a baseline gave you a winning trade yesterday doesn't mean it's supposed to do so tomorrow. All right. So tread carefully. Always cut your losses, ride your winners. Nothing is perfect. Nothing's 100%. But hopefully, this can just help put the odds in your favor if you choose to use a baseline and trade trend with the candle range theory. So I hope that helps someone. I appreciate your time and attention and watching, and you have a great rest of your day.